Welcome to Friday Takeaway. Mainstream centrist Emmanuel Macron won the French presidential elections, beating the left-wing politician Marine Le Pen. We in Malaysia should care because even though France is the weakest of Europe's big three economies, a Le Pen victory would have spelled retreat from globalization and free trade. In a staggering turn of events, US President Donald Trump has fired FBI Director James Comey. This move means Comey's investigation into whether Trump colluded with the Russian government to steer the outcome of last year's presidential election is over. Last year, 56 fewer Malaysian professionals decided to return home, and that's prompted the need for an updated talent strategy, says Talent Corp. A stronger local currency would also help, with the ringgit being the region's worst performing currency in the last 3 years. The Institute for Democracy and Economic Affairs, or IDEAS, has also weighed in. They've said that Malaysia's top corporate tax rate of 24% and a top personal tax rate of 28% is too high, and Malaysia needs to drop them to stay competitive. At stake, of course, are jobs and investment in a region where there is vigorous competition from low-cost tax jurisdictions such as Hong Kong and Singapore. As IDEAS have said, growth in other revenue sources like GST would help build an argument for lower taxes. A quick look now at the CI. As at 10 a.m, the KLCI is up 0.2% to 1,778 points, 0.8% higher from last Friday's closing. Year to date, the CI is up 8.3%. Next up, some big weekly movers. Media Prima, they've bought out Rev Asia. Now, Media Prima are one of the country's largest media companies, having agreed to buy out Rev for 105 million ringgit in cash. Now, following this acquisition of Rev Asia, Media Prima Digital's reach will increase from 4.6 million to 9 million unique visitors a month. That's going to give them third place behind Google and Facebook in Malaysia. It will be immediately earnings accretive, complement their more mature audience base, and allow them to negotiate for better advertising rates. But will slower, more corporate Media Prima be able to work with a fast, hungry Rev? COMB research says that diverging editorial styles and workforce profiles could pose a challenge when integrating the two companies. That, plus a still poor ADX market and declining circulation, could hurt Media Prima. COMB maintains a hold call on Media Prima with a higher target price of 1 ringgit and 16 cent, and given the new earnings drivers from a growing online ADX platform. At the current price of 1 ringgit and 9 cent, Media Prima haven't done so great this year. They're down 17% in 12 months and lower by 5% so far in 2017. Hopefully, the Rev acquisition will help drive the share price in the right direction. Axiata Group Berhad have fallen into our crosshairs. Axiata are one of Malaysia's top GLCs, a mobile player focusing on high-growth emerging Asian markets. They got controlling stakes in Malaysia, Indonesia, Sri Lanka, Bangladesh, Cambodia, and recently Nepal. Axiata have placed up more stock in the telco tower business, E.co, this time to Co-op, raising $100 million. That's given them more cash to grow organically and for potential acquisitions, while still retaining control with a 62.4% stake. This latest fundraising means Axiata has placed out a total of 34.1% stake in E.co to Innovation Network Corp of Japan, Kazan National, and now Co-op, all at the same equity valuation of approximately 1.5 billion ringgit and an FY 2016 EV/EBITDA multiple of 12.5 times, which is comparable to their regional peers. E.co aside, Axiata's main operating segments have been under pressure, none more so than with Celcom, which is fighting a price war in Malaysia. And with the active M&A activities that Axiata are currently embarking on, dividend payouts could well be capped. MIDF are neutral on the stock with an unchanged target price of 4.98 ringgit per share, and premised on a 2017 multiple of 7.5 times EV/EBITDA, which is the group's 5-year historical average, at the current price of 5.31 ringgit, Axiata has year-to-date returns of 12.5%, which are much better than its 12-month return of negative 0.8%. But activity has picked up in the past month. Axiata already up 4.5% since April 11th.